Hi, this is Michael Carlin, president of Henry & Horn Wealth Management with your Manage the Funds podcast. Today, we're going to talk about how to buy municipal bonds. Why? Why munis? Great question. Glad you asked. And this is a question that we got from listeners. Municipal bonds are super important for lots of different portfolio types. No one investment's perfect for anyone. So let's just make sure we're really clear on that. Municipal bonds may or may not be ideal for you, but they work for a lot of people. Particularly, it really needs to be in a taxable account, an account that as it earns interest, you have to pay tax on it every year. A municipal bond's not the kind of thing that you put in a retirement account of any kind because you don't pay tax on those on an annual basis. So if you have an investment account that's taxable and you're looking for an element of safety and security, then a municipal bond may be the perfect place for you. So let me be sure to state that municipal bonds aren't for everyone. As I've already said, I'll say it again. This is not a blanket recommendation, but they are key and critical for a lot of portfolios. So we want to make sure that when you're buying municipal bonds, you got to do it right. Lots of people who buy municipal bonds understand the fact that second to a United States Treasury, many consider a municipal bond second in quality, just to United States Treasury, which is considered by many to be the safest security around. So you already know right off the bat that when you're dealing with a muni, you're dealing with a safe, secure investment. But what is a muni? A municipal bond is a state-backed bond, and there's lots of different state-backed projects that states raise money for, and they do so by issuing a municipal bond. And the nice benefit is the states don't have to pay a lot of interest. As a benefit to them, there is no federal tax due on the interest that is paid out by the municipal bonds. When you sum it all up, if you're an Arizona resident, for example, and you buy an Arizona municipal bond, it's for some Arizona-based project. And if there's interest that comes out, you don't pay federal tax on the interest and you don't pay state tax on the interest if you're an Arizona resident. But if you buy a municipal bond from anywhere else in the United States and you're not a resident, that interest you will pay your state tax on. So now that we've established that, we've established the quality. We know there's a tax-free nature to the interest that comes out, which is a key and critical component. Municipal bonds are also very liquid, which means that in the event you need to sell them, there's often a pretty good market to sell them in, which is great. It's one thing to have a safe, secure investment. Lots of people think, when you think safe, secure investment, what's the one thing that pops into your mind? Lots of people right off the bat, my house. Sure, a house can be safe and can be secure, but is it liquid? Can you sell your house tomorrow? And for what price? I don't know, and it'd be really hard to do that. A municipal bond, those strike a price daily. You have a pretty good sense for what you're going to get. So you can get in and you can get out of them fairly quickly, fairly easily. And again, the safety, the security, the tax-free nature of the interest. Lots of people look at it as like, well, that sounds like a panacea. This sounds great. I should have some of those. And the answer is probably if you're worried about the market going down. Probably if you're looking for, again, safety and security. Probably you should own a municipal bond if you're in one of the higher tax brackets too. But buying a muni isn't easy. It's actually really difficult. So that's where we have to have a how-to. We don't want you buying a municipal bond without listening to this how-to first. Municipal bonds don't trade on an exchange. Like, you can't turn the TV on and then you see the ticker moving on the bottom of the screen. Those are stocks. And you're seeing fresh trades, people buying and selling, and that's the price. There is no stock exchange for bonds. It's not how it works. Bonds are sold person to person, party to party, which makes it a little bit like the Wild West. You kind of get a sense for what the price is, but it's not perfect. You need to know that going into it. The, The municipal bond environment has also changed a lot over the past number of years. Interest rates are at or near, 50-year lows. Depends upon when you're listening to this, but interest rates are a lot lower than they've been over the past number of decades. Most people that insure municipal bonds are out of business. And people who own small little municipal bond pieces, and you'd be surprised when I'll tell you what a small municipal bond piece is. It's getting harder and harder to trade those because liquidity is down. The limited available supply is down. So, oh my goodness. You're like, well, on one hand, you're safe and secure, and I liked all of that stuff that you were saying. Municipal bond sounds great, but now there's no exchange. I don't know, how am I going to get it? And if most of the bond insurers are out of business, is my money even safe? And now it's small position sizes. Well, what's that? A small position size in a municipal bond is anything even less than $100,000 is a small municipal bond position size, which has, I'm sure, many listeners saying can't be. It's true. The municipal bond market's highly, highly institutional. There are places that will allow you to buy smaller bond lots, but be really careful before you buy. We'll tell you how to buy, just to make sure if you're going to buy in smaller lots, how to attempt to try to do it without paying too much. So with that, let's go to the next. The next component of this is that municipal bond buying is a lot harder than it used to be. If I look back at 2006, December 31st, 2006, just about 70% of all municipal bonds were AAA rated. AAA rated. They were the highest quality that exists. Great. Fast forward to December 31st, 2016, 10 years later, 17% of municipal bonds are AAA rated. Wow. It used to be, again, the vast majority of bonds that were out there had this great quality to them. Well, without many of those bond insurers, a lot of those AAA ratings went away. And so with that increased risk comes an increased sense of research that you must do to make sure you understand your municipal bond. I mentioned it's a state project. Well, what's the state project? Is it a highway? Is it a new football field? Is it a new school? Is it for public works, water, energy, utilities? There's nearly an infinite amount. There's about 500,000 different bond types, municipal bond types. You won't know them all. And to give you a sense and a scope, 500,000 munis, there are only about 3,000 listed stocks. 500,000 munis. It's a different jungle. It's a different ball field, and it's a different kind of investment class. So buying this kind of quality isn't going to be easy. It's something we can do though. You need to be keenly aware of that lot size. We talked about buying big. If you buy a municipal bond somewhere between $25,000 to $100,000, if that's the amount that you invest to buy one bond, if you look at the information that I have, the average markup that you were paying in 2004 was 1.2%. The average markup today on the same $25,000 to $100,000 bond lot size is 1.6%. Now, you're probably saying, is that a lot? 1.6% is a huge amount. With a municipal bond, you're really, depending upon how far out or how long the bond matures, it's going to determine what the rate of return is. But in today's markets, if you're earning a 4% or a little bit more rate of return, you're going out a little bit of a ways, and giving up 1.6% to just fees in acquiring the bond alone, that's a big chunk. You got to be careful of that. Conversely, if you look at the data for bond trades that are done for every one bond you buy, if you buy it in $1 million block, it used to be 0.1% cost 2004. 2016, the cost is 0.3%. Just to review, 1.6% cost buying one bond between $25,000 and $100,000, and 0.3% today on a bond over $1 million. Like I said, buying in small lots can be difficult. You got to have the information behind you. There's a website called EMMA, E-M-M-A. One of the beautiful things about municipal bonds is that they can be transparent. EMMA will tell you when you enter in a particular kind of bond type what the historical trades were. You'll know. You'll understand what the markup is. It's key and critical. You can't get that kind of information on stocks. If that information exists on bonds, so go to the EMMA website. It'll tell you a lot about markups. So there's also a huge change. Again, I mentioned a little bit about credit quality, but the number of upgrades and downgrades, it's staggering. In 2015 alone, there was over $500 million of municipal bond downgrades that year. Meaning there were concerns about the quality of the issuers of these municipal bonds. So when you're buying a bond, you're going to want to understand whether or not that municipal bond, is it on credit watch? Is there something that is being looked at either credit watch positive, like there's an improvement, or credit watch negative, like there's something to be concerned about here? Absolutely look at that component. Because know that it's just because something's rated AAA, or even AA, which would be more common, or single A, which would be still yet more common. If you see a bond like that, I would want to know not just what its rating is today, but is it credit watch positive or negative? What have been the changes in the underlying credit of that issuer? You got to know. If you look at the new issuance of municipal bonds, it's unbelievable. There haven't been that many new municipal bonds issued. And you certainly, when you lay it out and you compare it to things like the U.S. Treasury, we're now past $21 trillion of U.S. Treasury bills. And as of 2016, we're at about, call it $4 trillion of munis. And we have, by comparison, about $9.5 trillion of corporate bonds. So the municipal bond market's a lot smaller than the corporate bond market, and it's a lot smaller than the Treasury market. And we're not seeing a whole bunch of new municipal bond issues being brought to the market every year, which is slowly shrinking the supply. The supply isn't all that great. And as the supply gets tighter, the prices go up, which is a part of the reason why you're paying more in bond fees. It's incredibly competitive, and it's difficult environment that we don't see getting a heck of a lot better. So be very cognizant of the municipal bond total supply, because we don't want you paying more for a bond than you have to. So the municipal bond, we talked about, it's a large market, it's an inefficient market. And then you'll see things like Detroit or Puerto Rico. When those things happen, it's if you own a Detroit or Puerto Rican municipal bond, you don't, those are bad days. Those are bad days. The value of those bonds go down, and it creates concern and cause. But what you may not have understood is that, or you might not have known, is that lots of municipal bonds across the board, just because Detroit went down, all go down with it. It creates buying opportunities. So we would look at significant situations that happen, and maybe you can use that as an opportunity to buy favorably. I'm not saying buy Detroit or Puerto Rico, but you'll see a lot of municipal bonds getting thrown out with some of those other issues. We're also going to want you to pay attention to things like which states have significantly underfunded pensions, meaning which states are going to be in financial trouble. Some of those states tend to be the states that have the most amount of municipal bonds. So be careful about those states. You don't get dragged into a state that's going to end up having some financial difficulties. We would obviously, if we could have around the clock, hopefully it'd be things like Detroit and like Puerto Rico that you want to avoid moving forward. So one of the things you need to know when you're buying a municipal bond is that the longer the bond is, the longer it takes before it matures, typically tends to pay you more. The shorter a bond is, i.e., meaning the quicker it matures, usually it'll pay you less. So as I take a look at what this, and they call it kind of a yield curve is, and that it's low to high, you're expecting to earn somewhere, again, in today's market, maybe somewhere around 2.5 I don't know, 2.2, 2.3%, somewhere in that range for a 4-year municipal bond. And you're hoping that if it's a 15-year bond, you're hoping to get somewhere, I don't know, in the 3.5% to 4% range, tax-free, which is good. Because if you're earning 2% tax-free or 4% tax-free, and if you're in one of the higher tax brackets, it's really like earning almost 4%, and it's really like earning almost 7% on those two different bond issues. There's a real rationale and a real level of excitement that people have with munis because the total return can be great relative to an after-tax return. There are a few different ways you can construct your municipal bond portfolio. You can do it in a concentrated fashion, meaning you can just focus on one particular part of year. You can do a laddered, which means you have bonds that come due every year over time. You can do a barbell, some long, some short. Here's the thing. Depending upon the interest rate environment that we're in, those strategies are going to differ. But you're going to want to understand the interest rate environment that we're in now. And as of today, as we're recording it, it's pretty flat. So you're going to want to really be careful and pay attention to the yield curve shape and buy your bonds and the maturities accordingly. So we want you to best position your municipal bond portfolio. So how are you going to do it? You're going to want to understand the changes in the muni market. You've done that now. You know that bonds aren't as high quality as they used to be. You know that the insurers aren't where they used to be. You know that we're in a flat yield curve environment. So you've got to be careful when you're picking your maturities. You got to try to buy in big lots. One of the ways that you may want to be buying your bonds is you may want to look at a mutual fund that can do all of this stuff for you. A good municipal bond mutual fund is something that's easy enough to research, straightforward, and will allow you the opportunity to have an institution buy the bonds for you rather than you doing it yourself because, again, buying in small lots is difficult and can be dangerous. So I'd encourage everyone just take a look at the benefits of an active management mutual fund approach before you go ahead and dive in and buy your big bond portfolio. So with that, that is our How to Buy Municipal Bond piece by your friend Michael Carlin, president of Henry & Horn Wealth Management. Thanks so much. Take care and have a great day.